So, with the announcement of the cancellation of student debt up to $20,000 by the government, is there finally enough clarity around one of the largest parts of SoFi's business to the point where this high flying fintech growth stock is now a buy? Let's find out together. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Okay, let's go ahead and talk a little bit about SoFi stock, where it's at right now, where I think it's heading in the future, if I plan to buy the stock myself. And of course, let's talk about what all of this student debt forgiveness means for this high growth fintech. Okay, now just a quick little background on SoFi in case you're not too familiar with them. This is a fairly young fintech company that provides an all in one online platform experience for their customers, usually through the very well polished application on your phone that allows you to do anything finance related, like taking out loans to borrow money, refinancing things like student loans or mortgages, saving and spending money through savings and checkings accounts, and it even offers investing features similar to that of Robinhood, which is, of course, one of the most popular apps to buy and sell stocks and is actually my preferred investing app of choice as well. But SoFi has just as many great features, including stocks, crypto, automatic investing, and even retirement accounts like IRAs. And that strong diversification has helped them grow their user base by huge amounts every quarter, reaching a high of over 4 million members today. And while that growth did peak at over 100% growth during the pandemic and lockdowns because of all the stimulus money being pumped into the markets, it's actually still growing at some pretty high rates of around 70% in each of the last two quarters, despite having to deal with gigantic headwinds like inflation, rising interest rates, and a macroeconomic recession. Yet, despite all of that, SoFi's adjusted revenue is still managing to climb by over 50% both this year and the next, at least according to their own guidance. And even longer term, there should be plenty of room in the market and major tailwinds for them to lean on specifically to help keep them growing at some high rates into the future too, especially in the areas of fintech. For example, Robinhood has almost 23 million users versus SoFi at only around 4 million. And it's probably even less than that actually use their investing features at all. Most of them are just refinancing loans. So there's plenty of room for growth just on the investing side of things alone. But besides that, we know that the larger financial services market overall is gigantic at literally trillions of dollars in size, but is completely ripe for disruption from growing technologies, which is why the fintech market, kind of the subset of that, is expected to continue growing by over 26% a year through 2030, reaching a monstrous nearly $1 trillion in size. For contrast, SoFi only did less than 1 billion in sales last year. So this is a huge market that they have plenty of room to expand into over time. But we'll talk more about their financials in just a second. Meanwhile, though, SoFi is doing a great job of taking advantage of all that financial disruption by not only offering all these different services on one integrated platform online, but they're also doing innovative things like providing application programming services to other companies so that they can build out their own digital banking products as well. They've also made a number of strategic acquisitions, like, for example, the one in fintech company Galileo, which allowed them to integrate Galileo's advanced APIs into their own mobile platform to enhance it even further, while also giving them access to Galileo's more than 100 million accounts that they can advertise many of their own products to as well. There's also the acquisition that they made in Technisys, who makes cloud-based processing technology for banks, fintech companies, and various other financial institutions. And there's even the most recent acquisition that they made of an actual bank that finally gave SoFi their official bank status, which allowed them to make certain structural changes to their business, which is helping them improve their profitability. In fact, that SoFi Bank, that part of their business, in its first a full quarter of operating is already profitable. I think it was like 25 million in profits just for that part of their business. But I'll talk more about profitability in just a second because that remains a major concern for their business at large. But we'll get to that in just a second. One other concern, though, that I just want to run through right now that is usually dominating the headlines when it comes to any kind of negativity surrounding SoFi stock has actually been their heavy dependence on student loans, which has likely caused most of the crashing in the stock as it has now fallen by mind blowing close to 80% from its highs, crashing from almost $30 a share following their 2020 IPO to just around $5 today. I mean, it's pretty crazy. Now, just to break down for you when talking about SoFi's dependence on student loans and what all of this means for them going forward after the 20,000 debt cancellation, I'll start by saying that SoFi's overall business is broken up into three parts, with by far the largest part of that being lending that makes up around 69% of sales this last quarter, while technology made up about 23% and financial services at 8%. And the problem has been that lending was always made up primarily of student loans. So when Democrats started pushing for student loan forgiveness on top of the current payment pause that came from the pandemic, well, investors started worrying that nobody would want to refinance their loans with SoFi, since that would convert them into private loans, which prevents them from receiving all the benefits of these new federal policies, and thus it could slowly wipe away all of the interest revenue that SoFi collects from those refinancing deals every quarter if people are not, choosing to refinance anymore. Well, to make matters worse, Biden officially announced last week that the federal government will now be officially canceling up to $20,000 of student debt while also extending the repayment pause up until the end of this year. But as bad as that might seem at first glance, there's actually a couple reasons why I think a lot of this is very overblown and the crashing of the stock is way overdone at this point. First of all, as SoFi's CEO pointed out recently, and as I mentioned to you earlier as well, anyone who has already refinanced their student loans with SoFi does not qualify for the debt forgiveness because they now have a private loan rather than a federal one. On top of that, the average student loan being refinanced by SoFi was over $70,000 prior to the pandemic. So wiping away $10,000 or $20,000 still leaves a lot of student debt that can be refinanced later on. In fact, even with the new federal plan, there is estimated to still be around 48 million Americans with student debt of over $1.75 trillion that can be financed. And while the payment pause started as a headwind, it might actually turn into a tailwind next year when the pause ends and you see a giant amount of borrowers choose to refinance their loans to get lower interest rates since they now have to start making payments again. And that might especially be the case if Republicans happen to take back control of the government in the coming months and years, since borrowers may start thinking that no more debt cancellations will happen for some time, so they might as well refinance their loans and start paying them back. Of course, all of this is just heavy speculation on my part. Anything can happen. Who knows how it's all going to play out. But even if we were to assume the absolute worst case scenario that somehow all student debt gets completely wiped away and no new student loans are ever taken again, well, I still think that SoFi is so well diversified at this point that in a few years, I think student loans may not even matter that much to investors anyway. For example, we know that student loan originations have been decreasing for years, falling from more than 2 million in the first quarter of 2020 to less than 400,000 this last quarter. However, personal loans picked up that slack, growing from 900,000 to over 2.4 million during the same time. And this latest quarter, student loans dropped by 400,000, but personal loans grew by almost the same exact amount, completely picked up the slack. And despite the huge drop in student loans, that segment's revenue actually still went up. It's kind of interesting. And while lending is still the largest segment today, their non-lending segments have grown to make up about a third of the company, which is up from less than 3% in 2020. That's pretty crazy. So the more that those other segments continue to grow, some parts of them are actually doubling year over year at times, well, you're going to see them make up a larger part of the business and the dependence on loans will slowly go down. And yet, despite all those positives, the stock has crashed by so much, really as if SoFi hasn't made any of this progress at all. In fact, the valuation has plummeted from a price to sales ratio of over 20 to now being less than 5 today. That's pretty cheap for a company that can put up as much growth as they can. Granted, profitability continues to be one of the biggest concerns for SoFi as they consistently lose millions of dollars on the bottom line every year. But if you read deeper into those numbers, you at least find that they are making some progress in the underlying business, as their adjusted EBITDA, which is the profits before things like interest, taxes, and depreciation, has actually been improving quite nicely over time, jumping from negative over 100 million in 2019 at a negative 33% margin to now positive over $100 million at a positive 6 to 7% margin. Overall, I think SoFi is looking pretty attractive at these levels as a speculative stock. And yes, I do still consider them speculative because they continue to lose money on the very bottom line, and there are some serious concerns over one of the biggest parts of their business. But I absolutely love how much effort and focus they've put into diversifying that business. I think there's huge future potential in several markets that they operate in. And I just think that at these prices, it's worth gambling on if I'm specifically looking for a speculative fintech stock to bet on. I think for that specific category of the market, you could argue that SoFi is the most attractive out of what's available out there. Unfortunately, though, I already own way too many spec stocks, including, by the way, Robinhood, which does give me some exposure to some of the things that SoFi does. So I probably won't be picking it up at this time, but I gotta be honest with you guys, the more time that I spend tracking SoFi, the more that I research them, there are times where I literally regret buying Robinhood, and I kind of wish I would have just put that money into SoFi instead, because I think they're very diversified. I think they have a lot of future potential. I love a lot of things that they're doing. I like a lot of the stuff that Robinhood does too, and I think they also have a lot of potential. I'm kind of 50-50 on it. I don't want to own both. I have too many spec stocks. I don't want to have another one to worry about and keep track of. But who knows? At some point, maybe in the near future, I may end up selling out of Robinhood and moving that money over to SoFi. Like I said, I'm still kind of 50-50 on it. For now, I'm sticking with Robinhood, but SoFi is definitely up there. I think it's one of my favorite spec stocks at the moment, and I think it's a pretty good value at these prices. But hey, that's just my opinion. I'd love to hear what you guys have to say down below. And by the way, let me know if you want me to do an update video on Robinhood or any other stock. And let me know if you own SoFi. Are you thinking about buying it? How do you feel about it? Do you agree with me? Do you disagree with anything I said? I'd love to hear your thoughts down below. But thank you so much for watching the video. Hope you're all doing well, and I will catch you in the next one. Take care. Bye-bye.